Oh no, I forgot to do the thing. Here, hold on. Okay, that was actually kind of funny, man. That was hilarious. But I have to get through the disclaimers and stuff. So, what's up everybody? Happy Monday. Question for the chat. Do you believe the market is actually in mayhem or is it all shenanigans? Is this legit or is it shenanigans? But anyways, welcome guys. I got our boy here. Let me pull him up. 1, 2, 3. There he is. Boom. Oh crap. Ready, set. There he is.
There he is. What's up, everyone? Happy Monday.
What is up? I'm going to do a couple things. So welcome, by the way. And if you don't know, today's a big week. What we do here every Monday is just kind of go through, what happened? What do we have on deck? What do we have to look forward to? And what the hell's going on with the market, right? At the end, so you got to watch the end. At the end of the show, we will go through some charts, maybe come up with some trade ideas for you pretty much every time. And this week, I want to go over a little bit of technical something called the market internals. So it's going to be a little preview, maybe some mastermind stuff, but a little school of gains preview, because I did make a post today and I didn't see a lot of interaction. I'm like, maybe the market the Twitter really doesn't know how to read internals. So I think it's worth going through today. But that said, here's what we do. So every Monday we come in here at the lunch hour. I'm a little bit late today. Sorry. My voice is thrashed. It's been thrashed. It's gonna be thrashed for a little bit. But here's the recap. We didn't actually have a Monday meeting last week because I don't do a weekly trade plan when the market is closed on Mondays. So I got a little week off, but anyways, I wanted to catch up a little, right? So last week, here's what we got on the calendar, right? So last week we did get CPI. If you didn't know, I believe estimates were 0.2% for the month over month. We actually came in hot 0.5 versus a 0.4 prior, against a year over year coming in hot slightly at 3% versus 2.9% prior, and the core. So all of these numbers, I mean, they came in hot. Right. So the good thing here is that I don't give a shit about CPI or PPI, but the market unfortunately does. Right. So the reason I really don't care about CPI is because it is the most backwards looking economic data point that you could actually pick out. Right. For whatever reason, I don't know why, it's the market's favorite one. So it likes to react the most. You guys know my favorite economic data point, non-farm payroll day, baby, which we won't get for probably a couple weeks, right? So we have till March. For now, we have our NFP levels. If you don't know what that is, sorry, grab Twitter and read something on it. But that's what we got 2 weeks ago, right? We also got FOMC minutes, by the way, which more or less came out as Fed policy should stay restrictive until inflation falls. So big surprise. Inflation was a little bit hotter than anticipated. Not like absolutely blowout hot. And jobs data coming in pretty weak. Actually, not horrible. I think it's going to balance itself out personally. But what I will say is that, and if you're watching the rates come down, you're watching gold go to new highs. The reason that gold is doing what it's doing and rates are doing what they're doing is because there's a little bit of a flight to safety going on right now in the markets. And so if you're wondering, hey, why is the 10-year coming down? Well, that's actually demand, right? So we're actually buying the 10-year note, and that when you have more demand coming, the rates of the 10-year actually come down a little bit. So this week, though, is kind of like my tell. So I'm actually short gold. I don't know that I should be short gold, but they've been coming in hot at 2,700 or 270 on GLD. The reason I'm short gold right now, just a little bit, is because I just don't, it was up to like near 3,000 an ounce on tariff and geopolitical risk. I don't really believe, what's up, June? June in the house. I don't really believe that there's a lot of geopolitical risk. I think it's just a Trump thing. Emp got rugged. He's coming back. But, here's the thing. If we see gold coming down and we see rates going back up, what that should tell you, Emp's back, what that should tell you is that we're coming back to a risk on type of environment, meaning that the safety trade is getting unwound, right? So if you guys are familiar with staples or XLP, we saw a little bit of that get hot and heavy last week or last 2 weeks, and I do a show with my buddy Amit too. It's tough. Like there's a benefit to having what's the word? Like an even portfolio, a balanced portfolio. But especially if you're young, you don't really want to be like too heavy in these staples. But the truth of the matter is, and maybe people don't really tell you that, but the truth is that actually the staple stuff is short-lived. And at the end of the day, growth is always king. And no matter, but there are times in the market where growth gets absolutely shellacked and your staples do a little bit better and maybe flat to slightly bullish and your growth is just getting hammered, right? That's what's true. So you have to know that that's just part of the game. In the long term, it does hash out better. But again, it's not always fun, but at the end of the day, it usually works out. All right. So with that said, Emp, I'm actually going to stop my share really quick. You guys, by the way, have you not seen, look at Emp's beard here. Is he not super clean?
I finally got cleaned up a little bit.
You guys super cleaned up, man. I'm loving this. Anyways, if you want to go ahead and show, so, oops, I'm sorry. I didn't want to. So we had some headlines before we go into the catalyst. So the headlines so far, by the way, Robinhood closes the SEC crypto. Well, the SEC closed the Robinhood crypto investigation. Surprise, surprise. If you're looking at Tesla today, Tesla had a FSD rollout in China. That's pretty big news to me. Opened pretty down and then making its way back to the upside. And Apple drops this bomb of a plan to invest $500 billion with the B in the U.S. over the next 4 years, namely in TSM's new Arizona plant and for their new chips. I kind of feel like this is the tariff kind of sidestep, but look, 4 years is not necessarily going to be.
Timmy went to the White House and Trump talked him into it.
He clearly went to the White House. That's for sure. And yes, MSTR, we'll take a look at this, I guess, later. $2 billion buy in Biddy. So Bitcoin, I haven't even looked at Bitcoin today. Let's see. BTC USDT. I mean, it looks like it's got a little floor on it. Look, the truth is that Bitcoin's been trading at 95K for like the better part of 3 months. So it's not going down. It's not going up, but it's not going down. So
in the box.
It's in the box. I mean, it is what it is. We just, sometimes stocks go up, sometimes they go down. Most of the time, they do exactly what Biddy's doing, and that's a whole lot of nothing. And then maybe a little bit under the radar headline, Google signs a $2.5 billion GCP deal with CRM. I mean, that was kind of wild for me to see. 2.5 billion is not small. This is for GCP to bring, I think it's to bring Gemini into Agentforce with Salesforce, which, Salesforce predominantly an AWS shop. So kudos to Google for actually getting a pretty hefty contract on that. But those are the main headlines I caught. And Emp, if you had any more, have at it. But I'm going to bring your screen up here in 3, 2, 1, boom. And we're going to go over LuxAlgo's Catalyst Watch. So every week, what day do they put this out?
Sunday. Every Sunday, midday, afternoonish. They give you a nice little catalyst thread right here that gives day by day of all the big things coming.
Beautiful.
Apparently, they say the NVIDIA report isn't the only thing that's coming out. I mean, when I pull up my earnings calendar, that's all I have on here.
Yeah.
I set that to
That's
show
all,
that way on purpose.
That was like the name of the slide for sure. NVIDIA to the rescue, question mark.
But yeah, and it fits, right? Because there are going to be so many eyes on the video, but there are some other things going on. Market holiday over in Japan today. We don't have a whole lot today. We do have HIMS. I know a lot of people are watching HIMS. The Nancy name, msft this afternoon, Zoom, and Riot, one of the Bitcoin miners, which has been a whole nother topic that if you want to touch it, you can. I stay away from that topic these days. No, the Riot, the Bitcoin miner topic. Yeah. Now, HIMS will be an interesting one. I definitely think HIMS earnings will be interesting. Obviously, it's
HIMS, I think, is definitely. HIMS took a huge beating. We didn't cover it last time, but
they did some investing. Yeah, it's just, but all those stocks, right? Paper, you mentioned this a little bit.
So it was I forgot who it was, but anyways, they basically said that the GLP-1s are no longer in shortage anymore, and HIMS got absolutely shellacked instantly on the headline, and we know that it's got like a 35% short interest on it. So not surprising to see. I think when we look at the HIMS chart, it's going to be more of, do the shorts use this opportunity to take profits? And that's look at Edgeful in the house. Look at this, man. Do the shorts take the opportunity to take profits? And that's interesting, right? So I will say, did a little research. HIMS they do sell the brand name Wegovy, Ozempic, whatever. The thing is that they make about 5% on those versus like 50%, I think, on the compound version. So from a margin perspective, they would get hit, but they still sell the name brand stuff. But anyway, sorry.
Yeah, so moving past today into tomorrow, there is a PayPal Investor Day. Apple also annual
that's a big one.
meeting.
I did not have that. Dude, shout out Lux, because that's definitely under the radar. Yeah, shareholder meeting tomorrow, 11 a.m. Eastern. All right.
Yeah, and outside of that, I mean, consumer confidence on the macro side, small auction, I'm not really worried about. Barkin will be talking. They'll be barking out, of course. Home Depot earnings, a couple other names into it, but that's all on Tuesday. Other than I think this is the big one. There's only like spicy chilies next to this, like they like to do sometimes, but still a big day. And then Wednesday, Fed barking, another speech, new home sales, the Alexa event with Amazon. So there's a lot of
this is why it's clutch. I can't find this stuff usually, but like Amazon Alexa event, this is what, Wednesday, 10 a.m. Eastern, so 7 a.m. Pacific my time. All right.
Yeah. So right.
Interesting catalyst. Interesting catalyst.
So keep your eyes, if you're in an Amazon trade or anything around Amazon. Obviously, Alexa event. There's been a lot of discussion around them trying to take Alexa to the next level, right, with their AI stuff. So it'll be interesting to see if they come out with anything new there. Obviously, the earnings are the big thing on Wednesday. NVIDIA.
That's it. So we got Snowflake, Bucky the Winter Soldier now.
CRM.
Bucky, you guys, I don't know. So do we still?
Is Bucky back?
I don't know. So if you don't know, so Snowflake, I used to call the Winter Soldier. In like, if you're referring to Snowflake, we would just call it the Winter Soldier, right? But then if you know the story of the Winter Soldier, he went to Wakanda, and his real name is Bucky. So at one point he lost the title of the Winter Soldier, so we now call him Bucky. So if you hear us say Bucky, we're referring to Snowflake. We don't know if the Winter Soldier's coming back in or not.
We don't know, but it's constructive. I mean, maybe you pull up that chart here in a little bit. That one is a little bit constructive. CRM Salesforce is also, we've seen that sector of the market do very well. So CRM on Wednesday as well, but everyone's eyes, obviously, we know are going to be on NVIDIA on Wednesday. So we'll see. I mean, once again, title of this show, was NVIDIA going to save the market? It's done it before. I wouldn't put it past it to happen again, but we'll see what happens. And then we go into a lot more macro stuff on Thursday. You can see we have some first revisions of GDP. We have the weekly jobless claims, of course, that morning. Another Fed speaker, 3 Fed speakers actually that day. And then we do have some earnings worth looking at on Thursday as well.
First revision for GDP.
First revision. So the first look was about 3 weeks ago, maybe. Right. So first revision, which will be interesting. I think we should pay attention
to that. Did my hood just
get
back to 50? Oh, let's go. Sorry.
There you go. Earnings on Thursday. Dell, I think, is a big one. There's a lot of things going on with Dell and the servers and
Yeah.
different things like that. Partnerships. XAI recently, mentioned that.
So we have. This is interesting. I saw a request on also Radiant, right? Thoughts on the SMCI. So what I will say is SMCI is definitively going to trade with NVIDIA, whatever happens. And then it's probably also going to have back-to-back, since NVIDIA is Wednesday night, then Dell is Thursday night, might have a little follow-through on Dell's.
Definitely.
So
yeah,
the double pairs trade right there. And then the big old Rocket Lab, baby. Oh, that's a big one too. Yikes.
Yeah. They're big theme going on with Rocket Lab. They have Duolingo on here
right now. He's tweeting a lot. We'll see.
Yeah, he really is. So that's your Thursday, and then Friday, PCE price index. There's your spicy. Yeah, that's the biggest macro point of the week.
Definitively the biggest. I wish the only thing they're not doing is I wish they would put the estimates on there. Here we can pull it really quick. So Friday's core PCE consensus to come in slightly hotter. What is that? 0.3%, forecast at 0.4 against a prior. This is month over month for the core at 2.2%. So consensus is that PCE is in line with CPI and PPI again. But so PCE, by the way, is the Fed's favorite gauge. So the Fed's favorite gauge, economic gauge, is this, and this is because this PCE is personal consumption's expenditures. So it's actually how much the consumer is spent, or how much money is being spent in the economy, like the velocity of money. And if you're familiar with how inflation works, it's not about how much money we print. It's about the velocity of money. So if more money is being spent in general, then that will show up later in the CPI and or possibly PPI. But this is why it's more leading than CPI and PPI by far. Not as much as NFP, but maybe one day they'll change that tune. But for now, PCE, you get income and spending. That's definitively a more important gauge than CPI, specifically for the Fed, though. But this one, I don't know. They're looking like they're prior coming at 2. I show forecast at 0.4%. That's hot, man. Okay, you're showing.
Yeah, you wonder.
3. Prior.
No, consensus 0.3, forecast 0.4. So it's sometimes these vary a little bit on here, but essentially they're looking for it to be flat to up a little bit, which is that residual? Is that residual or read through from CPI last week, or what was that?
Yeah, so they would be doing it backwards. So what I would say here is that if you're looking at this number on Friday, if this comes in cool at all, it's a rocket ship, baby.
Yeah,
it's a rocket ship. But if not, no bueno, right? So we'll see.
But yeah, so that's pretty. We also have retail inventories at the same time coming out with all of that. So PC, personal income spending, and retail wholesale inventories. So a lot of pretty important data, I would say, right there on Friday with the economic calendar. And then if I turn this off back to the normal look here, you can see those earnings that we were talking about there throughout the week. So yeah, I just did that on purpose, obviously, because I feel like that's what most people are going to be looking at in NVIDIA. But I think there are a lot of other names on here, Paper. I know there's names that you're interested in. I know a lot of the viewers and listeners out there are also interested in several of these. HIMS has been a big hot one lately on X. Kava has been a big one for a while on here. Rocket
Lab
as well.
Kava, actually, in a bit.
The Nancy name today. What do we see out of the Nancy name today?
Oh, shoot, that's tonight.
Yeah,
Tempest AI.
Tempest is tonight. Look at this. Not a whole lot to go off. A fairly new company, so they've beat 2 out of 2 times. But what happens next? So that'll be interesting. SoundHound later in the week. We know that there's some story headlines around this with NVIDIA selling some of that position there, or some of their investment there. So a lot of things here.
You're getting bullish on this Rocket Lab, man. I mean, I think Rocket Lab's super interesting. I cannot get over what I forgot what the phrase was, but when during the inauguration, he's like talking about literally putting the flag on Mars. I'm like, oh, wow. Okay. So it could be a theme for like the next 4 years for sure.
Definitely. But that about does it for what's like on the radar as far as earnings, as far as macro stuff, all of that stuff, Paper. So if you want to grab it back and go to whatever you have next on your docket, maybe some charts eventually too.
Let me get this over. So I wanted to look at seasonality just for a little bit, right? I think that people sometimes forget. So this is a 4-year cycle of the 4-year presidential cycle. So the stock market typically runs in 4-year cycles, but the first and second year really are not usually that great. But the first year, and I don't trade off the calendar, but I do think it's important to understand like where we are from an average perspective. The end of February ends up usually being February is not usually the greatest month historically speaking. Actually, do you have Edgeful stats on that? And let me know if you do. And I know you got to go soon, so just you can.
Which ones did you want? Because
I just S&P 500 monthly.
Yes.
Yeah. So like, because this is a 4-year seasonality presidential cycle, but in general, February is not, honestly, it's not the best like month overall. And I was at somewhere recently at a MITS thing, and I remember talking to some people, that aren't like still kind of getting into the markets and like when to buy. So June, July, usually very strong months, right? See this February into March. So usually March is a pretty good month, but if you span out your buys, like there you go, the last towards the very end of February.
This last week of February is usually rough.
Yeah.
And this is using the last 3 years here. If I go back 5 years, it's going to capture.
Go way more than 5, but I would go
5 years is the max we run on Edgeful. But obviously this catches a lot of COVID. So like I usually keep that in mind, or I just go back like 3 years just to see what's happened on average over the last 3 years. Your chart's like the historical one from forever back.
Yeah.
But I like to see the recent trends following along with that. You see, we normally have a pretty rough end of February over the last.
So I would actually just take it right there. So bingo. So a rough end of February. If you're doing your annual DCAs and you're into your index funds, it's usually right around now, and it's usually sometime around September, right? So those are the 2 worst months typically. But I would say, look, I don't think this is a horrible spot. We will go into the indexes in a little bit, and I will say there's nothing. As a preview, there's nothing majorly broken so far. There it is, right? So
March is even still on the 5-year average. March is still green, even with that COVID. So with the COVID.
So February and September is what I just said for like if you're going to split it up into annual buys, like DCA, February, end of September. Those are usually the ideal areas. Anyways, sorry. Appreciate that, dude. But I just, a lot of people don't know that. Again, for anybody that's newer or looking into like dollar cost averaging into the markets, it's usually about now. And then you split up your annual buys, right? Twice a year, something like that. No big deal. But from a seasonal perspective, look, and a presidential cycle. So Edgeful, by the way, if you don't have this would be cool. If you're still around, this is something I do use like pretty regularly. This is, again, it's that February kind of dip. First year within that presidential cycle tends to be that worst one. So that's where we are. If we see this solidified, we actually get a heavy March through June, July, March through July rally. And we'll see. Right. But that's just where we are from a calendar perspective. Again, just as an FYI, I want to do a quick earnings preview. So far, and I track the Dow 30 components, right? So of the Dow 30, where we are right now, I'm trying to do these timestamps this time. Of the Dow 30, we've had 23 components report so far, right? Only 3 of which have actually missed. That's Boeing, Chevron, and poor old Mickey D's with the what do they have? The salmonella thing. And the rotten onions. But I think they're probably recovering. Again, this is from their forecast. Did they beat their metrics, not whether or not the stocks go up or down. But net, this is not horrible, right? We have Home Depot today. Or coming. I think Home Depot is a big watch. The chart's not great, guys. I'll just tell you that right now. And there's a lot of issues on the home builders front, but we shall see, right? They will be coming into their busiest months, which is the summer months. So that's going to be interesting. And of course, really NVIDIA, then CRM in terms of the Dow 30 components, right? So that kind of rounds it up. We just went through this. We don't really need to do a whole lot more. Does it feel, what it does, man? It really does.
Well, there's a point there too, Paper. When the index, like for example, when SPX is at 6,000, 50 points on SPX is not the same as 50 points at SPX 4,000.
It's all about dollar change, right? So net dollar change.
If you go by percentages, percentages aren't really that different. I mean, it has been a little bit more volatile, but the percentages aren't that different.
For sure.
If you go back and compare it.
If you're a Palantir holder, right? You just blink. You were at 120, and then we have a 15% sell-off day. You're down at like near $100. It's like $20, right? 120 something, $20 drop. Palantir has never had a $20 drop, but has it had a 15% drop in a single day? It's had many, right? Many, right? And so we
hit 90 by the way this morning.
Your boy's long Nike. We know that, right? But so there are. It's just it's growth, right? So it feels like it could feel like the stomach to you guys, the stomach rumble. It could feel like we're moving a lot faster, but that's because the dollar changes are for sure a lot bigger. And yeah, they do seem, I will say the market moves a lot faster in general because the news flow is a lot faster. So there's that too. But with that said, we do have we have a friend of the show that we, sometimes refer to. She helps out a lot. Her name's Miss Cleo, and she gives us a little bit of a forecast from a week to week perspective. So without further ado, let's roll her intro and see what we got.
I'm scared.
All right, guys. I really, so I'm going to preface this with, I believe last week she was not very on point, but
what is that top card, Paper?
I've not looked at it yet. I've not looked at it. Don't do it.
Oh
no. Okay. So what is that? What?
It says death. What?
I have not read this, dude.
But, selling everything,
dude. So these are up for interpretation. This is what she says. We'll have to read what the recap. I'm not a tarot. I don't do tarot readings, but I've had enough of these so far. Okay, so that's the theme card for the week. The way this works is that we get a theme card for the week. Maybe death is new life, right? Like maybe it's new life.
Next week is reborn. I don't know.
Yeah, next week is reborn. Looks like 5 of Pentacles here, dude. So this is not a pretty card either. You're like out in the snow. That's how it felt this morning. I will tell you, if this is what it was, that's how it felt this morning, right? Before the afternoon session, and you feel like you're out in the cold, starving, with nowhere to go. And then you find the Empress. Okay, cool. Which is a little ray of sunshine. And you get a nice little tree, 4 little cups there. All right. This is getting a little bit better. And then we have 7 of coins. So maybe we went treasure hunting, found some little nuggets. I don't know.
NVIDIA brings us the nuggets.
And then, I don't know how I feel about this. Temperance.
And then PC.
Do our cups, like, are we dumping out our cups, or what's happening here? It looks like a little explosion in the back. I've really never looked at this. Yeah, I don't know. All right. Enough of me trying to like figure out what she's saying. Here's what she actually says. So remember, just You know, we do this for comedic relief, but it is wild sometimes how accurate she can be. So the theme card is death. Often viewed as negative, all right? It starts off better, viewed as negative, but often brings about change that's ultimately positive. Hear that, Emp? Ultimately positive in the end. Let's see.
We're saved.
Let's see, right? Let's see.
Oh, the rebirth. Look, I said rebirth. Rebirth is necessary.
Like wings of our NVIDIA up. Yeah, it's possible. It's possible. The death part isn't fun. No, it wasn't fun last week, but rebirth is necessary. His bias is, yeah, here we go again. This is why, you know, like these people that give you the readings, like flip-floppy all the time. His bias is negative. So I'm expecting some pain, especially early in the week. Hopefully that, I don't know. Hopefully that's it. I don't think we'll see a bloodbath because we already saw one. But let's see what the daily cards have to say first. All right, fine. So Monday.
She's on track to start out the week, honestly.
So far. I mean, the theme sounds pretty accurate. Monday, we're suffering. And in state of despair, right? In state of despair. Oh God. But there is help available. It may take a bit of time to find it, though. All right. This implies that rallies will be sold. And the overnight green may become morning red. Look for a bit of fade after lunch, sometimes common with many cards in the deck. All right. Miss Cleo, you have a word with your manager here.
Checks clock.
Tuesday is the Empress. All right, so this is where we're supposed to turn around. I think so. I don't know. All right, look for chop and consolidation within Monday's range. All right, we may undercut a low or overtake a high, but it shouldn't last. See, she's wishy-washy. Overtake a high or undercut a low. This card,
no matter what happens, it's going to level off before NVIDIA.
Yeah, closes within 0.5% of the open, but closer to flat on average. She should bring a decent setup, though. Actually, that makes sense, right? Because you got NVIDIA on Wednesday, which is the 4 of Cups. So I think that we should read Thursday's card, by the way, for NVIDIA, because this is ahead of, right? So NVIDIA day, we draw a card with the keyword apathy. Not great. Apathy is the keyword of 4 Cups, really? Whatever. Not great, but fitting for death. I should note that the last time this card followed the Empress, we saw a very bullish trend day. That I could see that happening. Maybe this time we get lucky and see the same. I do believe that this card achieves one of 2 outcomes. Here we go with the flip-flopping again. Early week traders aren't getting the price targets they expected, usually due to chop, okay? Or mean reversion traps Tuesday traders and forces them to watch in agony. So if you got long tomorrow, you're going to be in agony. Tuesday should be.
All right.
Thursday, 7 of Pentacles. It's 547 or 47. That's the key here. My best guess is another move in Wednesday's direction with similar magnitude. Okay. It rarely trends, though. The only time that happens is after another trend day in the opposite direction for meh. So the likely situation is a slow grind in the same direction as Wednesday with the chance to get more if there was a trend established. I actually was really thinking about a neutral trade on NVIDIA. So maybe we go there. Friday, this is PCE day. Sadly, why she got to start out with sadly? Whatever. All right. Sadly, we're looking for balance for a balanced day here. Chop and consolidation galore. This is fitting for the death card. We have big moves early and then start to slow down on Friday. There's not much to do but plan setups for next week. You know, it sounds like most of the moves going to come from now into Tuesday and maybe burn off Wednesday morning. And then it sounds like from here we bottom out, rally Tuesday into Wednesday morning, and then Wednesday afternoon faded out. That makes perfect sense right ahead.
That actually goes NVIDIA over the last 2 years. The day of earnings, NVIDIA sells off. There's profit taking ahead of the earnings report on NVIDIA. But I mean, by statistics, I looked them up.
I agree. So the recap. Do we want to read this? I mean, you guys can read it, but we have.
Alex wants to know if we can draw new cards.
I mean, I did. She does do a crypto reading. I'll tell you, it's not much. I did see that was the Hermit or something. We have weakness early in the week with a lot of chop to close it out. Wednesday and Thursday bring the best chance of big moves. All right. Well, there you have it, guys. That is Miss Cleo. You know, that's cool. That's cool. We shall see. I did want to do one other thing. So I'm actually going to see if I can pull this up. Do I have it? Yeah. So, all right. Appreciate you, Emp. I'm going to do a quick look at the, so this is something called the market internal. So I'm going to make a big transition here. And I'm going to do a timestamp here because I want to make sure you guys have a chance to come back to it. So 35, 25. And I know Emp has got to go. I appreciate you, Emp, for hopping in.
Yeah, I got to jump, but this is actually, I'm really interested in this. I'm going to keep this playing while I drop off here. But
No worries.
Appreciate your paper. I'll be watching.
Yeah. So here's what we do. So if you don't know what the internals are, first of all, I have SPY right here. I have these set to a 5-day, 15-minute time frame on each of these. And there are 3 internals that I think are really important if you don't understand like what these are. And this, what it does is it kind of shows, it gives you an idea of what, oops, I'm going to try and make this a little bit bigger for you guys. An idea of what's going on inside the market. So hopefully you're not having you're not too bummed that you don't see my face right now. But on the top right it's $ VOLD. There's another internal, the 2 other internals called volume up, which is UVOL, and volume down, which is DVOL. Vol D is upward volume and downward volume together. So it's UVOL minus DVOL. And this basically shows you net flows. So I say net flows, inflows and or outflows of the market. So this day is obviously an outflow day. This is obviously an inflow day. What's important here is that we're going to be looking at trends, right? So if I just switch this to a 10-day, what was that? A 10-day, 30-minute, something like that, whatever I just did. This is like, here's big volume coming in and coming down volumes. But what I wanted to show you was this day is Tuesday here. And so this is Tuesday on S&P 500. Sorry, I don't know how to get this freaking after hour sessions off. Tuesday. Let's go. 10-day, 30-minute. Tuesday is what day of the week? Thursday, Friday. This is Tuesday. So Tuesday here, we showed inflows, but the market really wasn't. Let's see this. The market, this is market hours here. God, I hate this. The market was like, ooh, it's coming in. The inflows were actually lower than before. But the stock really wasn't going higher, the index, right? And then this is Wednesday. So Wednesday was really my telling day. So this is Tuesday. We showed inflows, but they were weaker than that prior Thursday inflows, Tuesday here. And then Wednesday was the kind of like warning sign. I'm going to try and make this a little bit bigger. There you go. So this is Wednesday right here. Wednesday was the biggest tell. And so what I'm looking at here is this is the outflow day. So this day, it was very odd because we were seeing outflows, net outflows, but yet on the actual chart, the chart was going higher, right? So I'm like, why are we showing outflows for Wednesday, yet the stocks were going higher? That was the first tell, right? First key tell. And so this is super crucial to understand. And we're looking at really the trends, right? So the trends of what's going on. At the same time, if I look at Tuesdays, this is called a tick. And this kind of measures like the velocity of the day. What I'm looking for is I've drawn a line here at 0. And I'm looking at most of the day's volume here, or the day's trading, is below the 0 line, right? So I'm seeing, okay, we have the cumulative tick here below the 0 line, net outflows, but yet the stock is going higher. This is a warning flag, right? So this is what we're going to be looking for moving forward, is something like this, right? And then on Tuesday, this here is ADD, is or advancers and decliners. So again, you can put a line at 0, which I don't know why I don't have it right now. I would put a line at 0. Oops, let me do that. So 0 line. Sorry. So this is your 0 line. And Tuesday, we're barely flat, right? So barely flat. And then we got into Wednesday. Wednesday, we opened down and end the day net decliners. So this is basically of the NYSE, how many companies are green versus how many companies are red as a calculation. Friday, and this is where we're interesting. So Friday, this is the big sell-off day. Friday. And bear with me, guys. I've never gone through this on stream before. Friday's big 0 day. We start out actually positive in from an inflow perspective and quickly flip negative. And this trends throughout the day. If I look at Friday's tick again, here we are. Most of the day we spent below that 0 line. So I have confluence here. We're selling off. Most of the day we're very weak. And then Friday again, we start up from an advanced or decline mode. We actually popped up, but instantly started selling off throughout the day and just continued on down to like negative 1400, negative 2000 on ADD. By the way, that's like your maximum low end. And we've gotten that once before, you know, Wednesday here, that Wednesday before last, we opened at negative 2000 and you see it completely go up throughout the day. There's another at that same day. What's crazy here is that this Wednesday we opened up, was it the Wednesday before? There was a Wednesday here, yeah, where we opened at a negative 1500 tick. Look at that, negative 1600 tick. Same day, opened at negative 1600 tick, negative 2K advanced decline. That's when you know you're hitting the lows, right? We don't have that today, but the reason why I wanted to show it today is equally interesting. We have a little bit of a change going on. So I'm going to go back to that 5-day, 15-minute. On the tick, you know, if you're a scalper or a fast trader, you're usually just looking for like what's your impulse, you know, positive 1000, negative 2000 are your pretty much your strong impulses. But as a trend trader or a swing trader, what I want you to do is really just look at, hey, where's the daily volume actually trading? Are we mostly above or below that 0 line? And today we're actually pretty neutral. So as we get into the back half, actually, I'd say a little bit more above the 0 line. So today's ticks have actually been trending above the 0 line versus this is what looks trending below the 0 line. So as we get towards the back half of the day, I'm going to be looking for two things. Well, for a couple of things for confluence. One, here's our price action, right? So from price action perspective, Miss Cleo saying, hey, we're super low. We open towards the lows. I'm looking at advancers, decliners. We're actually holding for the first time in a long time above the 0 line. High end of this, if you see plus 2000, you're pretty much topping out, right? But if we can start trending back over 1000 on the advancer, on the ADD, that's ideal. I'm going to be looking for confluence of the back half of the day's ticks actually showing above the 0. So like accumulating above 0 into that 500 area for the majority of the back half. That's going to be constructive. On the inflows, so Vol-D, I love this. This has been lining up a lot. We're sitting on the 0 line literally right now. And you can zoom in lower and lower. If we can hold above 0, so we have net flows into the market right now for the back half of the day, I think that's going to set us up pretty nice for that Miss Cleo bounce showing for Tuesday into Wednesday, right? But I want you guys to grab these, know what these are, right? I'm not looking at them super myopically intraday. I'm actually looking at them more on like a trending basis, right? So if we do get a sell-off, as an example, and this next sell-off from an outflows perspective is weaker than 6 million something, then I think that would be more of a bottoming action, right? And we can see what that looks like really here. So you have big outflow day. If we do get another outflow day, that's fine. But if it's weaker than the one we just had, that actually would be constructive as well, right? Which would set us up for a little bit of a pop. And that, I think it was that following Wednesday after this this event where we ended up having that major reversal day. So today, big outflows. It's actually weaker. The outflows were less than the last event. But net, I mean, accumulating to the upside, this is generally bullish, but I'm not seeing what I need to see from a trend perspective is I need to see a couple days like this where they're starting to stack. And I'd want to see like the volume builds, right? So building bigger in succession day after day. But anyways, this is market internals. Do we have these in trading view? I think so. I just, you can. Yeah, so they are in trading view. I don't know if it's going to show exactly the way, but VOLD. So it's UVOL minus DVOL, exactly as stated. There it is in trading view right here, right? So it shows exactly the same thing. ADD. Yeah. So it's got advancers minus decliners. There it is in trading view. So they are in trading view. I just have it up in Thinkorswim. So there it is in trading view, right? Super important to know, just like keep your pulse on the market. What's going on, right? Do I, especially in times like this, am I seeing like net accumulation, right? In that inflow versus outflow, net accumulation. Yeah. Nothing crazy, definitely not crazy. And it's definitely not like this, but if we see that flip at the 0 point, okay, maybe we can change our tune, but it's the same thing. It's like, this is it right here. So am I seeing more accumulation? But this, if I have a weaker down day, so a big weak day, and then I have a weaker down day than this one, I think that's really what I'm going to be looking for. And then to see it start to flip, that's ideal. But yeah, so like when we get down here, negative 500 mil, this is pretty typical of like, look, we're, look at this big old outflow and then boom, followed by big old inflow. This is normal, right? This is not anything crazy just yet. Advanced decline. I really didn't even know that it was like this clean in trading view. Same thing. Yeah, so we're pretty neutral right now, and I think that's gonna stack up almost exactly with the market really quick. So I'm gonna move on. So we're gonna do like a sector check really quick. Do you guys have any questions on that? We can cover it later. Keisha. Her reading was accurate from what I had just pulled. Yeah. Oh, wow. Her reading was accurate. What's the 5 of Pentacles for Wednesday? I think the 5 of Pentacles is good. But anyways, here's what I do. So I'm going to do a quick sector check. So SPY, what I'm going to do is I'm going to start on the weekly perspective, and let's just get things right here, guys. So from a weekly perspective, this is what SPY looks like right now. And I think this is important, right? So the last low, so we have here is a low. Just turn my magnet on. Another low. We have a series of higher lows. You guys all see this? We have a series of higher highs. I don't know if I've done it this way before. And last week, we actually breached the highs. So let's make no mistake right now that the trend is fully intact. Even on this very small kind of myopic view of a weekly scale chart, this trend is fully intact. So I don't want to, I want to like taper these thoughts of like, oh, the end is nigh. It's just not what's true, guys. Right. So there's actually nothing broken on the larger time frame. That said, and here's the channel that we've been in. This orange box, by the way, is an average week's range. So with that said, look at how tight this weekly range has been. This is normally what we trend inside of a full week. So right now, we're actually not like our average moves have been significantly smaller than normal. I'm just going to take these off really quick. And what we can see is like, even from this low perspective here, we're still holding, right? So we're still holding these lows. And this is really like firmly the box that we've been sitting in. The box could even go as low as this, right? This is going to be 580. But I mean, again, if we go lower, it's not like the major trend is intact. It's not until we actually look a little bit closer on the daily scale where you're like, oh, okay, maybe we're due for some exhaustion. So again, you can clearly see the box that we've been traded in right now, near term, right? And even longer term, like I just said, the box goes all the way down to 585. But net, this is a breakout retest. We have a look below and recover, right? And above here, we have something called look above and fail, right? We started to have that little breakout, but you guys know we're looking from a daily perspective. We're looking for 2 to 3 candles closing above, right? And we have like an open below, close at. We have an open above, close towards the lows. We're open below, close above, and open above, close below. We don't have like that clean candle. When I say 2 to 3 candles, like fully above, we don't have a clean candle fully above like this. I'm looking for that, like a couple of those, to really determine like whether or not it's time to actually get out of this box. And until I have this, I don't, right? I'm not ready. We're in the box. And actually, to that end, we're at the top of this box, which means that the probability of potentially going lower to the low end of the box is still firmly there. The thing is, though, we still have, even with this trend, is we still have that series of higher lows. And if you guys know me, the lowest area that a higher low can show up is actually 496 from a technical perspective, right? I can look at this and say, even from here to here on a fib perspective, so this is just from this impulse low to that impulse high. From a fib perspective, this puts us firmly into a golden pocket regardless, right? Or golden zone. So the fact that we bounced here and the fact that really we held so far this morning, I'm going to use this low right there. This is our crucial pivot, and that's 598.51. So from a technical perspective, as long as we're over 598.51, I don't see this going down. And it's not really right to say, hey, we're going full-blown bear market, right? But the question is really like, does this mean that we're going to have a dead cat bounce kind of trend? Because we have broken this trend right here. But again, does that really hold a whole lot of weight? I think NVIDIA is going to tell us a lot. Can we come back down and do from this entire swing right to this low end of this pocket right here? Yeah, I think this is all possible. The thing is that even if any of that stuff happens, we're not actually breaking any kind of major structure. So if you guys don't know me, what I like to do is I actually use these NFP levels, and you can see it here. So the major level here is basically 600. As long as we're holding 600 on a daily perspective, so meaning as long as we do not get a full day's open and close below 600, I don't have any reason to think that that's going to break down, right? The second that we do, and this is happening, right? You can get 2 days below with the full day's trade below the 600 level. Then and only then, in that case, can we think that, hey, look, we're very likely to fill this gap all the way to that 6.5 retracement at 588.28. And then again, from there, we'll have to see, do we bounce or do we have another kind of dead cat bounce? And that's going to look like that, really. And then at that point, we would go at this level, we can either go back up and retest that for that real dead cat bounce, or do we continue down? And if we do continue down, again, maximum downside 577 or 578. But even at that point, the only thing that happens here is that this just becomes a very neutral chart. And for now, we're holding the 50-day simple moving average, which is this blue line. Guys, the truth is that nothing's broken long term. And so while it feels kind of scary near term, it's not It's not over till it's over. And the fat lady has not sung yet. So that's where I would, yeah, and psychological level, this is massive, right? So if you guys don't know about our NFP levels, this is February NFP day, right? February NFP, meaning that in this box, this was that trading day. It's this day right here. This day determines the trend for the entire month. If you're not, and it's not a guess, but basically, as long as we're over February's NFP low, I don't expect a full breakdown. It's not until the market starts to trade below 600.05 from an NFP perspective that the market is definitively saying, okay, well, we were priced too high and we need to go back another month, and we would price it back to January. If it doesn't like January, at the low end, it could be all the way down here, but that's it, right? So as long as we're holding that 600 level on a daily perspective, there's no real reason to get overly bullish or bearish. So if you're a bull, we want to be a good bull. And so what do we say? A good bull always knows where the bears are hiding, right? I'm going to take these NFP levels down for just a little bit, kind of clean up this chart so it's a little bit better view. A good bull always knows where the bears are going to be hiding out, right? So here is the breakdown area right here, right? So at 610, we know that there is definitively a lot of overhead supply, right? And so I would actually draw this down just a little bit. Let me take this. I'm going to use a different line. So if we do get up here, I would actually be more cautious around 608s, just because this is the major breakdown, that major distribution area. I think that's pretty clear right here. A dead cat bounce could actually bring you all the way up there and retest that downtrend, this broken uptrend, near-term broken uptrend. And that would be a better spot for the bears to actually look for a new short, right? So with this said, what happens to the market structure overall for the next couple of weeks is that, I think the best way to put it to verbalize it would be that every day's trade it has to be viewed as its own independent trade, if that makes sense. Because at the end of the day, we are firmly in a box. It's not time to press the gas in either direction from a bullish perspective or a bearish perspective. Now today we're at the low end of the box, but last week at times we were at the high end of the box, and you want to kind of like, no, hey, look, we're just bouncing up, down, up, down, up, down. Nothing major has broken. That's definitive, right? So if you want to go out and be a uber bear, you're probably a little bit early, right? And at the same time, those bears are probably going to be thinking, oh, well, where's a better spot to get short if I miss the best entries, right? So just from this fib all-time high to this recent low of today, where does that give us? Gives us a couple spots. So number one here is that golden kind of retrace of the bear dip. That's right over 604 to 606, right? Ideally, I would say right in this is that golden pocket between 6.5 and 6.18. So it's actually slightly over the 20-day. So if you're buying dips here, my point of saying this is that actually don't get too over your skis or too overly excited, because it's not over yet, right? So I think at this point, what you do is you trade every day as its own day, like I was trying to say. So tomorrow, if this ends up being the high for today, tomorrow's trade could look as simple as this if you're day trading, right? Or if you're swing trading, you just want to see that. And then you take profits. That's going to be basically your 20-day. And then you could get a little bit impulse higher. That's it. But if you fail here, right, that could be a short, right, tomorrow. At the same time, if you pop up and you fail at 6:05, let's say tomorrow or Wednesday, you want to get out of the way because the bears might be hanging out, right? So again, it's the take every day, one day at a time. Alex, this is hilarious. Do I ever use indicators like, so RSI? Definitively no. I hate that. But I do use a couple things. So this is the double MACD in terms of my oscillators. What's true is that I never use an oscillator for a signal. It does not tell you to buy or sell. It's like a stop sign, red, yellow, green, right? And so right now, all I'm looking for, and if you look at my settings, you basically just see a green flash or a red flash. all I look for is if I want to short, I want to see that red flash already happen. Or I'm sorry, I want to see that green flash already happen and get in like right before it starts to flash red, right, on a smaller time frame. You know, this is a volume indicator. I won't really go too much into that. No, I don't use Bollinger Bands at all, aside from there are I have some, like, I have not changed these settings. These are volatility bands, which these settings are absolutely horrendous right now. Do not look at that. That just is going to tell me like this is for volatility. So I want to know when things are increasing, like trending volatility up, trending volatility down. This is a volume indicator to tell me when volume's picking up, and I should actually start to see some bigger moves. For right now, I really don't, right? And then I do, you know, this is LuxAlgo price action concepts, and I use like a lot of everything else I use is very much on price action. Again, any oscillator, these are called oscillators, RSI, MACD, things like that. Those are oscillators, are just like street lights, right? Like green, yellow, red. If I want to go long, I want to check an oscillator. Is it flashing green? Is it flashing yellow? Or is it flashing red? If it's flashing yellow, okay, maybe take a step back, right? Look for divergences in that. But that's really it, right? Other than that, I think very much it's price action raw, and NFP levels are the biggest hack that I've ever seen. I created it, but it's an epic hack, right? This what flashing green and red. This is just what do you call this? This is Chris Moody, CM Ultimate MACD, multiple time frames. That's it. That's a freebie. But anyways, that's it. That's all I'm looking at, right? So basic price action, candle to candle structure. That's what I'm looking at. That's what I'm reading for the most part. I do have this LuxAlgo price action concepts. I think this does a pretty good job. I have it pretty stripped down. Guys, hood is over 50, baby. Let's go. But yeah, I think it's raw price action. I don't indicators and things like that. I don't like to use because they are a lot of confusion a lot of times. And what's important is being able to react sooner than later, right? So same thing. So NFP levels, this is what's going to save you guys. This is that December and February low from an NFP perspective. Yeah. I took one trade on the Qs today and it was long, like at the lows here. I've since closed it, but I wasn't thinking long, or I wasn't thinking short, and I was looking at those internals mostly to say, if I'm going to be short, am I shorting the whole, which is a figure of speech? Like, am I shorting right before the shorts are about to cover? I want to be wary, and I want to look at inflows, outflows, cumulative tick, advances, decliners, all that kind of stuff, and they were flashing that we were ready to bounce, right? That's what's true, right? But this is going to pay you dividends if you understand non-farm payroll levels and things like that. And yeah, we do have an indicator at Lux that's available. For now, we're actually just retesting yesterday's low. So what I will say is if we can reclaim Friday's low from the Qs, then what's true is that the market is about to call BS on what happened last week. And we're going to start to reclaim back in that range. What I'd say is it's not time. Upside targets today, 526.71. Tomorrow, if we're over, and we do have a session gap, by the way, if we reclaim that session gap at some point today or tomorrow, then we would see most likely close to 530s or high, like mid 530s ahead of NVIDIA earnings, which that would really take us back to that area of like, hey, look, if I'm going to be a good bull, I need to know where the bears are going to show up, right? And the bears are going to show up probably somewhere around that area. So I'm just going to take that swing high to the swing low right in here, right? So 533 is where I need to be cautious. Again, every day right now, level to level, I think needs to be taken as its own trade because the market is in the box, right? Doesn't mean that we can't go right back to the bottom of the box only to bounce again. But until we're really trending below, and I'm telling you now, that we are not trending below anything. It's the same story for the Qs. I'm just going to put these NFP levels. It's not until we're firmly below 521s. I have February and December NFP levels right here. Unless we have a clean open and close below, okay, cool. But then we only go to 514 and then 503, right? Which happens to be an all-time high retest anyways, right? A prior all-time high retest. We can do the same, exercise on the Qs, but I'll save us a little trouble and some time. At the end of the day, look, nothing's actually broken here. Nothing has been lost. The general uptrend is fully intact. If anything, what's true is that you're at the bottom of this channel up. That's usually where you want to get long anyways. So all the bearish sentiment, I'm not buying, you guys. I'm just not buying it. So I'm calling BS right now. That's where I'm at. It feels scary, but again, it's, it is what it is. From a daily perspective, look, actually, even at this count, like candle count, look at this. This is really it's not that bad, right? So like if this is the last low in structure, 521.95, we barely wicked below it, firmly reclaimed it, right? What I'll say is if we get above 529.07, we should see very quickly, right? 532, and then very likely 536. But again, each trade needs to be taken into its own account as its own individual trade, because especially if we get a move like this in short order, we're very likely to come right back down and continue to chop around in this box, right? And so again, a good bull knows where the bears are hiding. The bears are hiding at 536 on the Qs. Does this help you guys? What's up, Mal? No, so we will go over Amazon, right? Yeah, for us to get. Oh, and so one thing about the rates and stuff, I talked about gold. And I talked about, so we know the dollar. What's crazy here is that, oops, get out of here with that. What's crazy here is that the dollar's been coming down pretty firmly, right? So we peaked out 110s on the dollar. We've been coming back down pretty steadily. This is actually bullish for the market. Yet at the same time, the market has been coming down. It's getting a little hot in here. Oops, I just turned my fire blue. Sorry. It's getting this should be bullish for the market in general. What I'm seeing is this is the 10-year, right? We talked about yields just slightly. I'll take these NFP levels off. And that the 10-year yield, TNX is the yield. It's not the bond itself. The yield is actually coming down. The reason that yields come down is because there's demand for the bonds. And so this is a visual representation of a little bit of fear in the market and that flight to safety, if you will. We're also if bonds, here's what I'm trying to say. If we see a turnaround and the 10-year bond actually starts to climb a little bit, we should also see it in gold. Unfortunately, gold is like uber bullish right now. I'm actually short gold and I'm about to close it today. But this is, I think, I'm short because like the full extension of that multi-year, cup and handle is complete. The problem is that like gold is gold is the safety trade of all safety trades. So if you're worried about geopolitical risk, tariffs, things like that, you're going to run to gold, right? And so this goes in what I used to call like the conflict. I do call it like the conflict cabinet. If you're worried about geopolitical risk, things like that, you typically want to be long gold. It's not doing what it normally does. Okay, so the dollar has been coming down significantly, but where I'm at with gold is that at the same time, this is both the 3-hour chart. Here's the chart of dollar. Gold should be almost equally bullish as this is bearish, but it's not. It's like really stuck in the mud. So I took that as like baby gold is kind of like, fizzling out a little bit. It's tough. It's a tough call, right? I need to see like full closes below 370, and I'm not right now. Here's our 269.90. So this is where the bulls have really been stepping up. My gut is that if we start to see gold fail, number one, that could be a really juicy trade. But number two, it's going to be a sign. And we see, if we start to see gold fail and we start to see the bonds come back down or the yields go back up, that's going to be my risk on kind of barometer for the market, right? So that's, I think, it's an important watch. I'm going to have to close this today because I'm not getting that daily close below 270, but it doesn't come off my radar, right? So like if that does turn around on me, I think it's definitely something to watch. That would be bullish, I think, for the market also. But again, the fact that gold is being so resilient right now is kind of giving me a little bit of pause that, there are definitely still bears out there. And why I would say every trade needs to be taken as its own independent trade, and not really, we're not thinking like major swings or anything like that, right? All right, so guys, go ahead and drop some tickers, and we'll take a look. I know I saw Amazon first, so we'll do that. So Amazon first up, right? Oh, Vista Energy on those. So Amazon's, again, I'm going to start with a weekly perspective. This one's, so this is what? This is from here. I actually need to move this a little bit higher. This is actually from that last breakout area. Really not bad. So if I measure from this last breakout low to here, this all-time high, we're literally on kind of like what you would call that golden pocket area. The uptrend, prevailing uptrend, is broken. And from a weekly perspective, you're not going to be confirmed unless this week goes green. And again, this is just like the indexes. So even if this week ends up going green, here's my concern is that if this does happen, let's do this. We'll make that green. If that goes green, I still have a very, this is the whole market. You have this very real area of like, okay, the bears are going to be waiting for you. They're going to be waiting for you hot and heavy. And honestly, that is normally where you see like a short show up. So it's going to be this level right here, 216.50. If we can really hold above, and I'm going to drop down to a daily perspective really quick. We open below, starting to trade above right now. You're not quite there. 216.50. What is this trend line? Not quite reclaimed, right? So it's basically these local lows right in here. So if this area can reclaim right now, you're going to run into that as resistance, overhead resistance. Doesn't look ready quite yet. I'm trying to mess with this transparency. Doesn't look quite ready until you can firmly get over this. I think this is going to be key. What we call this a key order block. It's about 216, give or take, and change. It's constructive, so it's very likely that this trades back up to it. In trading, we call this sometimes like a lifeline. So like if I'm long, but I'm long at 216 from earlier, it sometimes could trade up to it right before it potentially gets rejected. So this is what I mean by like, you got to be aware everything in the market right now looks like it's exhausted downside, but at the same time, the bears are all around. I would wait till this really gets firmly over 217s to take a net long trade. That would be here. I'm just going to drop this to a 30-minute, see where this trend line is coming from. Yeah, and this is basically this net downtrend is being retested at the moment, but I don't want to see it fully fail, because a big failure down there does take it to that 200s one more time. So it's interesting. I wouldn't say this is a good long-term spot. That's definitely going to be towards 200. But if you don't own Amazon, it's a decent spot to start a position. Again, it's not a bad spot at all to start a position, but be prepared to potentially buy a little bit lower. Oh, is that Casey? What's up, Casey? What is up? What is up? So Robinhood, I love this one. So I'm in the same patch with the market. Robinhood, $50 support, baby. Robinhood 2025, $50 support is in the cards. I believe it was firmly solidified. Look, by the way, I'm overly bullish on Robinhood. So do not take what I say with a grain of salt. When I'm too bullish on things, it leads to danger. And I know that, but we've so far held the 50-day simple moving average. This is before earnings. I'm going to look at this area right in here where the $50 support was activated, right? So this is pre-earnings. This is your actual earnings, power earnings gap right there. This is pre-earnings, literally right here. So as you can see, just saying, no structure damage, really, like little bit near term, but all that does, and it does this for the rest of the market, is it puts a lot of things into waiting periods. So it's like pause. Structure is still intact from a very large perspective. So when I say that on a weekly scale, so yeah, we have this big earnings move, gives it all back, and then we start to wick out. But really, what did we not do? Again, if any straters out there, you guys know this is your downside target. Kaboom, right there. If you do fail, like, and I have some decent confluence, right? 48.15. If I have another downside move, it's really just a 46.66. Again, this is all still holding that 50-day simple moving average, which you cannot see because it's too light on my screen. So I'll turn it up right there. That's your 50-day simple moving average. Still above it, right? Just barely, but nonetheless, still above. Technically, I have just cleanly retested here. And I know some of our guys, Jesse in the house, he was shouting out, this is my level. This is my level. Why is this his level? Right there, 48.18. This is why it's his level. I love this on a 30-minute plus time frame. You can see really where were the bulls stepping in big time. All of these guys, big time. Big movement off these candles, 48.15. There it is. So anything down here, I think is definitely buyable. Personally, I sold some April monthly $50 puts for a little over $5 earlier today. If I get assigned on those, I'm going to be a happy camper because again, my cost basis will be 45 plus or just under 45, which at that point, look, anything under 45, I think is just highway robbery. Like that's dumb. So is it possible that we get to 44? Yes. Right. So I want to be cautious. There is a clean fair value gap right here, right there. So 43.61 down to 42s is realistic. By the way, we are not out of the weeds just yet. So if we do lose that 50-day, I do expect Hood to come down here. But again, this is I'm not selling this anytime soon. I'm just not, right? And back to our point earlier of where we are in the market, just because it's at a level doesn't mean that we're out of the woods either, right? So yes, we might have bounced here, but the thing is that we're just not out of the weeds, right? So we still have this $52 level to deal with. This is again major support right here. Do we see this $52 area in fact be resistance? If that's the case, look, we could see further downside. So again, don't get over your skis. I'm not planning on selling this anytime soon. That's just me. Do you? But that's where I'm at. So that's my caution. A little overly bullish, but you know, it is what it is, man. So I think that we could be in this box for a bit, right? And I think that I would actually be perfectly fine with staying in this box for the next month or so. But I feel like this is a company that's just going to be doing, from a generation perspective, like a really good job. But let's be real, right? We trade and we invest, two different things, not compatible. We're still definitively in a downtrend line. Again, I'm a good bull. I got to be aware where the bear's going to show up. The bears are going to show up 52.44. If I don't continue through, then I'm probably going to come down a little bit lower. So keep that in mind as we go through. Microsoft, Kristen. Oh, this is a crazy one. Rarely do you get a Microsoft sub 400. Very, very rare. And we did get that today. I think that was pretty key. And it's usually a big like dip buy, so it can stay below for a bit, but this is all the way back to 2024. So all of last year 400 has held. You got down at worst to 385. Can it continue down a little bit? It can, but this is the same thing. It's like at this point, I think a lot of downside has happened. To think, number one, that we're going to instantly go into a big old bull rally is I think a little delusional, because after a move like we did have, Miss Cleo coming out with the temperance card, it just makes perfect sense, right? So I expect this is all the chop zone, right? On 450 on Microsoft, it's 415, right? So you can have a really bullish looking day from here, $15 to the upside from 400. This could be like tomorrow, but again, be very careful. I am long Microsoft. April calls for the full thing, but I would sell some like shorter dated calls against it, kind of turn that into a time spread, because this is what I don't want to see. For now, I think that we could get back up, and I'm going to need to see this continue through for that to continue on, for me to even think that we're in reversal territory. But at this point, nothing's broken long term from a market perspective. This is a little bit of a dip, but we do have lower high. I just don't have a lower low, because it's still showing up as support right here. So until this breaks, then I think, okay, it's possibly in trouble. They also got, I think it was was it Quantum? They had some breakthrough recently. Might have been Quantum something that they went into. So I need to see a real recovery from a weekly perspective. We're going to bring this up to here, 404.10. That needs to hold. We're sitting on it right now. So this is last week's low, 404.10. If we're over 404.10, what that means is that Microsoft is going to be back in the trend for the week, back into this kind of supply zone, and it's going to be battling itself to get through that, right? So 404 spot 40, which is exactly what you're sitting on right now, is critical pivot on Microsoft as we speak. So wait and see. HIMS is interesting. So HIMS has got earnings coming up, still pretty heavy short float right off the 20-day today. I think you get a little bit of a relief bounce, but earnings TBD, right? If there wasn't earnings, I would have just bought this dip, quite frankly. SMCI is going to be very tied to NVIDIA and both Dell earnings. We talked about it in some other streams. I don't like trading things this close to a 200-day simple moving average, because it can get very, very crazy price action. If I do, I actually rather look at it towards like that 45 level, maybe that retest of this prior breakout, because until then, what I am actually seeing is a very near-term reversal. So I don't like SMCI here now. No, I don't. This actually looks like it could wick down pretty heavily, like $5+ quickly, and fill some of these like inefficiencies in the market. You got all the way down to 36.60. Not saying it's getting there, but it's there. I definitely see 44s sooner than later. But again, when I say that, because of where it is on the chart with this 200-day simple, and again, I think that where it got to, by the way, is this was that prior. This is where SMCI was removed from the NASDAQ, right? Where all the nonsense came out. Oh, we're not nonsense, but like, we're going to take you out of the NASDAQ. That's literally right here, 61.66 this day. So all of that has already been erased. To me, you got your trade, your target's acquired. What are you doing, right? So you have to ask yourself, what are you in this for, a trade, or are you in this as an investment? Because at this point, you should not be in this as a trade. This is more like investment. Now you're really kind of pressing your luck to see if NVIDIA does the NVIDIA thing, which it might, and you see SMCI get a follow through from NVIDIA earnings. But that's where it's at right now. I think that's all upside targets achieved. Great trade. What are you still doing in the trade? I think you have to ask yourself that very seriously. Sorry, hate to be a downer. But that's SMCI. Chapito, can I do C3 AI? Really? I hate that one. It's a fake company. They work with Schlumberger. I don't like this chart at all. What are you doing in here? I don't know. This is not an investment. I don't want to look at it. It's such a horrible chart. Is it like, it's not a chart that I want to short? Because you're not breaking these lows. It says no touch. And I think that looks like there's earnings coming. Yeah, Wednesday. So it's a no touch. Maybe you get a relief bounce for a day or two, but get out of it. That's not a trade. Sorry, man. SOFI recovery today. Yeah, I saw that, right? So we can look at IWM. The thing is, IWM is actually as different than QQQ or SPY. IWM actually has some potentially real damage on this chart. So now you've hit that 200-day simple. It's got to recover real quick. And this is what I mean by I hate trading things that are just sitting on their 200 days. So you can get this whoosh and then whoosh right back up. IWM has to recover immediately for this to stay even a thought of being alive. And I mean like immediately. 216.80 cannot lose this at all. 216.80 down to right here. This is the death blow. If IWM is losing basically today's low, 215, nah, see you later, bye. She's going sub 200. So is this a spot where, you know, what's the saying? Was this the whites of their eyes, right? It's very possible on IWM. Look, the stock market never makes it easy to go long. Like it's never really easy. There's always a little trepidation, but if you were going to take your shot, look, we do say, I will say, we do say, you can't buy IWM when she looks good. You got to buy this redheaded stepchild when it looks like absolute doo-doo. And that's exactly what this looks like. It's just absolute doo-doo caca. So maybe that means it's the buy. It's possible. This is a big reversion happening intraday. So I think that goes with the SOFI chart though, because that's where SOFI really lives to me. SOFI, as opposed to IWM, no damage done, right? So absolutely no technical damage whatsoever here. Again, double beat, double skeet, quarter, you know, surprise, surprise. This is exactly where we want to see it hold. As close to 14 as you can. That's what we said for a while. This is an accumulation mode to me. We have been setting a series of lower highs though, since that earnings report. I think you kind of just connect this and you could get a nice pivot up to 1650s one more time and retest those highs. But again, the second that you get there, guys, you're in the box, right? There's no reason to think that you're out of the box just yet. So you got to know these are all trading ranges, right? These are good accumulation spots near term. I think everything is in a perfect area for accumulation near term. But don't expect, my point is, but don't expect that you're just going to V out recover right away. Cause we're at a point where we definitely need to see some breathing for sure. And Steven, if you don't have, I mean, you're getting the quarter for free. This is, I mean, can it go lower? Yeah. But the thing is, like, if you have the right outlook on Hood, like I'm probably not going to sell this in my trading years. It's a triple digit stock, man. I don't know how else to say it for sure to me, probably within the next 2 years or less. So I just, of all the quarters that we saw, this is one of the best quarters by far. And it's a major generational shift here happening at the brokerage level. It's one that we've never seen a shift like this happen ever before. The analysts on the street don't get it. They don't get it still, which is why I think it really could make that move. There's still people out upset at Vlad and the growing pains that Robinhood had. I think, again, you know, having a good amount of bears out there is a bullish case in general for this to actually just be an epic investment long term. So anyways, I'm getting off my soapbox. Man. Vlad wants Oh, for Microsoft, Raymond. Yeah. So Microsoft did add a new quantum chip. Okay. Reddit. We're gonna call it here pretty soon. So this is right back to where it started. Again, you have to wait and see. This is a wait and see chart. If you want to dip your toes in, you could dip a little bit, but I'd rather see this start to recover. Again, you had a lot of recovery already across the board, and just knowing where we are from a trend perspective, you're right in the middle, man. So you even if you entered Reddit here now and you started to see green, I just don't want anybody to get overly excited because the probability or possibility of seeing this is very real, right? And this is just wave down. It's very real. So you can, it's not a horrible spot. It's just okay spot. It's a breakout retest. I mean, it's fine. I think it's fine. But you'd have to have a stop pretty close to like 150s or so on Reddit if you were to go along here. I'd rather see a little bit of a longer term recovery. So maybe not this week, maybe next week. But look, it's a good company. They're making money. I think it's a good company. They're making money. It's more of a valuation question on this guy, for sure. It's a wild ride, no question. But does not look horrible. It is right back to retesting that prior breakout area. So thoughts on Snow? I mean, Snow I still think is an investment phase, but you know, at 177, 170, this probably goes right back to 200, or not 200, but like 190s. That's my thought. And I don't really cover that one. Google, I will. Yeah, it's so they got that contract today. The market's not giving them anything, any kind of credit for that. This is interesting, but I think this really wants 175, man. It really wants to give that whole Willow. What did I do here? No, that's not me. That whole Willow scenario back, which is right here, 175 at the 200-day simple. So you have a lot of confluence to go along there, but this is definitively not back in an uptrend until you're over 184. And really this whole block right here. This is a laggard at the moment. So right now you have prior support definitively turning to overhead resistance. It's not a long, yeah, it's a little early to go long. But I don't know how short it is. The short would only be to 175, 176s, if that. So not super interesting personally. No, I didn't do Meta. So Meta, I said 656, something like that, would be like that halfback area, really close. Big old wick downside today. So again, this is very similar. I think a lot of the pain has happened. And I think we get some bounces that are more like potential of dead cat bounces. I think you might see closer to 600 on Meta. But again, here's that earnings gap. You've officially given it all back as of today. So hopefully this is not going to end up playing out like Hood. Here's our earnings move, right? As of today, Meta has given up that entire earnings move in price action. So if it is anything like Robinhood, then it would be more like 630s for a full retest on this guy right in here, which I don't know. This looks a little sketchy right now. Little sketchy. I would steer clear. I mean, this is a day trader. Everything's gone into mostly like day trade mode, right? So you go day by day. It's gonna be above yesterday's high or below yesterday's low. CRISPR Therapeutics. I don't know, man. I don't know. Do you guys know Editas? EDIT and CRISPR. This is like squeezy. That's squeezing. Only because they have earnings coming. CRISPR Therapeutics did good. It's a big Kathy stock. So you're about half back. $45 is a decent retest. But again, you want to see it like give it some time to stabilize under there. But here's your base. It's not horrible. It's not horrible. This used to be a fast mover. It's not anymore. So I would want to see this shelf See where these prior lows are? Right in here. This can come down to 43. I don't want it below 43. But I would expect sideways action like this for a while, like weeks before it actually takes off. So no rush, but from a stock perspective, that's what you want to see. You could base out. That could be, you gotta have a very, very long time horizon on that because that's not a short-term play. Oh, SMC has to file tomorrow too. Okay, so there you go. So, oh yeah, that's right, 25th. So February 25th, SMCI files tomorrow. Or if they don't, then they're gonna take it on the chin, and you're gonna see if SMCI doesn't file tomorrow or they've pushed for an extension tomorrow, this is instantly gonna hit 44. Instantly, but that's what's holding this back right now, for sure. Alex, no. Moo. And then we'll close it up with for the Palantirans. Micron, it's the same thing. It's very much in the box. So like what's cool is that you can, if you know these trading ranges, honestly, you can make a lot of money just range bound trading. But if you don't know how to hit the sell button, which a lot of people don't, you can't, right? Because then you're just stuck turning a trade into an investment. You don't really want to do that. So I think this is constructive, but just under 96s. So maybe another like brief look below, maybe tomorrow morning. And then it's got to recover. Yeah, 90, 95 and change. Just basically where that 20-day is. Then you're going to retest this. It's a little early right now. It's not happening. I think the semis are similar. Yeah, it's all very tight. It's all wait and see mode for NVIDIA. All of this is wait and see for NVIDIA. But that said, let's close it off. Palantir, I had 90s, right? So 90s for Palantir was a decent retest coming into that zone. It's actually really close. So here's your full breakout retest. You have not quite given that full massive quarter back yet, but you're pretty damn close, man. That's going to line up to your 50-day simple. It's 85s. I think, it's tough to value. I don't know how to value this like from a fundamental perspective. The thing is that the expensive stocks get more expensive over time. The cheaper stocks get even cheaper. So this is never going to be a cheap stock at all. I think technically speaking, it's really close. 85s, sub 90s. If you can get over 108 was crucial for it to go back up, but we never really got close to that, right? So we hit that and then we failed right here. So you failed right there. 108, fail. So don't think it's recovering just yet. And you have a lower low. So it's slowing down. What I want to see is the momentum of Palantir slow down, right? So meaning that I want to see these candles get smaller day by day. And if the candles can get smaller, that's fine, right? Smaller. And what that's going to represent is like the velocity kind of like chilling out. So if the velocity can start to like relax, then it can probably try, at least attempt to get its footing underneath it, right? I want to see these candles get smaller, right? And maybe something like this around this 85, 82 level. And right now it's very simply this pivot, right? So 97.30. If the 97.30 is now the old 108 is now 97.30. So the old 108 level here that it needs to reclaim to get above and instantly shoot back, that's the new 97.30. So if it can basically reclaim that, then we go to 108 again. But that's it. And that's what I mean. Like every trade now in this market really needs to be like treated as an independent trade, because this is where the bears still are waiting, right? I don't want to see going epically long, only get my face smashed in, right? And then go back epically long. It's like each trade needs to be like basically handled as its own independent trade. But all right, guys, I appreciate that. And I think we're gonna call it. You guys all rock. Oh, I didn't do Tesla. No, we'll have to do it later. You guys got a bunch of them. Wait for a MIT to buy 69 first, then full port. Fair enough. All right, guys. I got calls coming in though, so I do have to jet for now. I love you all. I appreciate you, and I will see you on the next one. Peace.